At least no one else outside.
No, I made you announcements here.
Welcome everyone back to basic income. We're on the home stretch now. Post lunch, we might have a little slump, but not in this room. We're financing and implementing basic income right here today. And so we're going to run this in the same format we did for the session before. We don't have Eduardo in this session, so we've got three papers with Karl, with Scott, and with Troy and Joe. We're going to take in that order. So we'll start with Karl. It'll be about 20 minutes for the presentation and up to 10 minutes for discussion. So think of your questions. We've got at least 8, I think, people online as well, so we'll hope to get some questions and comments there as well. So without any further ado, Karl, it's over to you. And this time, he's got his 10,000 steps up. He's told me so he doesn't even move anymore. He's changed the desk. So it's the Functional Finance, Economics, and UBI. Thanks, Karl. Just turn that.
Okay, thank you. Functional finance is a heterodox or non-mainstream economic theory that was originally developed in 1940 by the Keynesian economist Abel Lerner. It's best known today in one specific form, one sort of subset of functional finance called modern monetary theory, or MMT. In this form, functional finance has recently begun to have a big impact on the UBI debate in two opposite ways. Some people state MMT in an exaggerated way that implies that government can spend all it wants on UBI or anything else without ever raising taxes or borrowing money, as if government spending had no limits of any kind, because taxes aren't needed to finance anything. Other people refer to the same MMT theory while arguing that any effort to maintain a livable level of UBI is unsustainable. So here I'm going to discuss the cost of UBI and the sustainability of UBI with reference to both functional finance and mainstream economic theory. Now, MMT is closely associated with the proposal of a federal job guarantee, sometimes called FJG. Like an income guarantee, a job guarantee would greatly expand government support for low-income people. But because the proposals of UBI and FJG expand support in very different ways, their supporters are usually pitted against each other, rather than against the people who oppose expanding any form of government support for low-income people. And we shouldn't think of ourselves as much as enemies. The basic idea of functional finance is that things that are physically possible are financially possible. It stresses the obvious fact that taxes don't actually finance federal spending. The central bank and treasury have the power to create money out of thin air and do not need to get the money by taxing or borrowing money from private individuals to spend on UBI or on anything else. Money is regularly created and destroyed by the central bank, the treasury, and the private banking system. In that sense, governments that have full sovereignty over their currency, such as the U.S. federal government, are never short of the cash they need to buy things. It is in this terminology that functional finance observations can be taken too far. People will say the government spending is free and never needs to be financed by taxes or borrowing. If so, one might suppose we get rid of all taxes, print up all the money we need to pay off the national debt, and increase government spending as high as we want on whatever we want, including UBI, including a UBI which could also be as high as we want. Unfortunately, this combination is not physically possible. We simply do not have enough resources to provide unlimited amounts of goods and services. And the attempt for governments to spend without limits is not financially possible either. It would create more demand for goods than our economy is capable of producing, and it would set off an inflationary spiral. Although MMT implies we don't need to get the money to finance spending, MMT economists are well aware that we need to make resources available to produce the things we want to buy with government spending. In the MMT language, even if the government doesn't need to finance spending, it needs to resource it. Financial mechanisms such as taxation and borrowing are the government's primary tools to resource spending. Non-financial tools such as regulation can also be useful. Now, paying down government debt, increasing government spending, including transfers like UBI, and increasing all taxes to create, all of those kind of policies create expansionary pressure. That is, they allow people to buy more goods, which is likely to encourage firms to produce more goods, to raise the price of goods, or a little bit of both. Expansionary pressure can be a good thing. The private economy very often generates contractionary pressure on its own, causing it to underutilize its resources, including its human resources, and underutilized human resources is unemployment. Some amount of government stimulus is necessary to keep the economy working at full capacity and maintain full employment. But government stimulus is not always a good thing. Too much of the wrong kind of expansionary pressure causes inflation, and too much inflation is counterproductive. Although taxation is not necessary to finance spending in the sense that MMT economists use that word, it is a useful tool both to counteract any... Well, that wasn't intended. All right, it seems to... Okay, anyway. So, although functional finance is usually considered a non-mainstream school of thought, most of what I've said so far is uncontroversial and rather obvious to anyone who has studied macroeconomics. Mainstream and MMT economists differ in more than just terminology, however. The substantive differences between functional finance and mainstream approaches are in how we should use the tools available to government. Mainstream economists are well aware that it's possible to finance government spending by money creation without either raising taxes or borrowing money, even when the economy, but they tend to believe, mainstream economists tend to believe that virtually any government money creation increases inflation rather than production. Even when the economy needs a stimulus to counteract a significant recession, mainstream economists often recommend government-issued bonds equal to the amount of money they create when running the deficit, because they believe that injecting money into the economy by deficit spending is always inflationary unless counteracted by taking money out of the economy through taxes and borrowing. Functional finance economists stress that fiscal space, what they call fiscal space, usually exists. That is, unused resources are available in the economy, such as unemployed workers, empty storefronts, unused factories, and so on. If so, a government stimulus can increase production without increasing prices by employing those underutilized resources. And no new taxes or new borrowing are necessary to counteract this expansionary pressure. New taxes and borrowing that aren't needed reduce the expansionary effects of spending and prevent the economy from reaching full employment. Now, mainstream economists tend not to think of the available fiscal space at all, or they tend to think that it's a small or non-existent except during deep recessions, or they tend to think that it's structural in nature so that expansionary policies will cause inflation even if unused resources are available. Virtually all functional finance economists believe that most governments have erred on the side of creating too much contractionary pressure, accepting higher than necessary unemployment and unnecessarily low public spending. Another important insight of functional finance is the recognition that not all government spending is equally expansionary and not all taxes are equally contractionary, as mainstream economists who focus on the size of the debt and the deficit tend to apply. For example, a tax cut or a transfer payment given to a wealthy person who is likely to save most of it can be less expansionary than a transfer payment or a tax cut given to a low-income person who's likely to spend all or most of it. Different spending programs demand different resources, which might be greater or lesser supply at different times. Different types of taxes and different borrowing strategies have different effectiveness on making the right resources available. Given this recognition, the size of the government deficit and debt are not what's important, What's important is the function of these tools, and that's how functional finance gets its name. It recommends that fiscal and monetary policy target full employment and price stability instead of the size of the debt of the money supply, which mainstream macroeconomists tend to focus on, even if their ultimate goal is price stability. Mainstream economists also tend to believe that a significant amount of unemployment has to be tolerated to maintain price stability. Functional finance economists believe the size of the debt of the money supply, if there's a thing we can call the money supply, would be whatever numbers worked out to reach the functional goals of our finance strategy: full employment, stable prices, and the other goals of government spending, of course. And that a genuinely full employment is consistent with price stability if they introduce the FJG, Federal Job Guarantee. Comparisons of actual and potential gross domestic product show that fiscal space does tend to be available. And if so, we could introduce some level of UBI without increasing taxes. But this functional finance approach does not reduce the need to consider the cost of UBI or really significantly change the calculation of what UBI's cost is. It does suggest different ways to think about how best to use financial and non-financial tools to make sure UBI is consistent with stable prices. So consider six reasons we still need to be aware of the cost of UBI, even given the available fiscal space. First, the available fiscal space is highly variable depending on the state of our macroeconomy. If the goal of UBI is to make sure everyone has enough to live on, we wouldn't always want it to vary with the size of the available fiscal space. UBI has some automatic variability as people move from being net contributors to net recipients during recessions, but automatic stabilization is an area where a federal jobs guarantee can do better, because people move from receiving the whole guarantee to receiving none of it as they go to the private sector. Second, if we introduce a livable UBI with no new taxes whatsoever, its gross cost and net costs would be the same, and we would be pumping $2 to $6 trillion worth of expansionary pressure into the $20 trillion U.S. economy every year. And that would far outstrip any reasonable estimate of the available fiscal space during any non-recession year. Now, third, if we introduce UBI, one more on the second. But it's definitely not possible to do that every year without needing some contractionary policy to finance or resource that UBI, to counteract that inflationary pressure if we want a UBI that is larger than the available fiscal space, which I think we do if we want things. And taxes are going to be our primary tool to counteract that expansionary pressure. So third, if we introduce UBI with at least enough new taxes to make the net cost relevant, it is far less likely to exceed the available fiscal space. And if it does exceed the available fiscal space, it will do so by a far lower amount. And then if we introduce it with no new taxes whatsoever. Therefore, any excessive expansionary fiscal pressure the UBI system might create will be easier to counteract with contractionary fiscal policy. If we're treating UBI in this way, we need to calculate its net cost. Fourth, even if there was more than enough available fiscal space to resource a high and stable UBI year after year without any new taxes or borrowing, UBI is not the only thing government can do with that fiscal space. It could be used for healthcare, for education, for housing, for transportation, the police, the military, the enrichment of campaign contributors. We need to know how much UBI costs to weigh it against the other things government might do with the available fiscal space. And to make the case that UBI is a good, cost-effective thing to do with the government's available financial, or if you prefer, resourcing tools. Fifth, fiscal space is not limited to the amount of spending that is possible. If it is the amount of spending needed to employ available unused resources, and that's what MMT economists focus on most of the time. But if the government wants to expand public sector resources to use more than the available fiscal space, then it needs to discourage private sector spending to free up the necessary resources. If government ever adopts any version of functional finance, the available fiscal space will be quickly taken up by popular government spending programs. If so, the case for UBI will have to be made out of more traditional terms. Given that we begin at capacity and that UBI costs X dollars, what are the best tools available to free up the resources necessary to make those X dollars of spending possible, and without creating inflation? Those tools are likely to be taxes, targeting, wasteful spending, or the inflationary spending of relatively rich people. So we've got to answer all those same questions. Sixth, UBI is likely to be more inflationary than many other spending policies. Net beneficiaries of a UBI are relatively low-income people who are likely to spend a larger portion of the money they receive from the government than higher-income people. The higher the UBI, the more likely people are to respond by demanding higher wages and better working conditions, and all of those things cost money, which creates pressure, expansionary pressure. The reason we wanted to introduce UBI is so that low and middle income people can buy more goods, a lot more goods, if we want a UBI high enough to eliminate poverty and give individuals the power that I talk about throughout my work. If we want those goods to be available, either we have to produce more goods than we are currently, which environmentally speaking might be a mistake, or we have to get higher income people to purchase fewer goods. Taxes are the best tool we have to get higher income people to spend less. Borrowing works too, but borrowing has other effects that we might want to avoid, most especially the promise to pay interest to the wealthy bondholders for for a long period in the future, increasing economic inequality, and to the extent that bondholders spend the interest they receive on goods and or physical assets, injecting new inflationary pressure into the economy, which will then need to be counteracted by either more taxes or more borrowing. Okay. Almost anyone who's inclined to consider UBI probably thinks that higher wages are and better working conditions for lower 60% of people is a good thing. But they also need to recognize that higher wages and better working conditions have a cost in terms of real resources. We measure those costs in money. For all of those reasons, even in the light of functional finance insights, we still need to estimate the cost of UBI. And we need to be just as much or more concerned with the question of how to ensure the resources net beneficiaries will consume are available. Thank you very much. I didn't actually get the chance to go on to the part about sustainability, but maybe that'll come up in the questions, maybe it won't.
Thanks, Karl, for making macroeconomics never dry. There'll be a short quiz on these 7 points as well. Please recall. Are there questions? Jeff?
Yes, thanks, Karl. First, there aren't any of the writers in the MMT school that are claiming unlimited anything.
Well, no, they never claim that. They only imply that.
Okay, well, they specifically say they don't. I'd defend them against that. Secondly, you didn't cover the emergence of central banks purchasing so much government debt. 50% of government debt in many cases, which my argument would be is actually not debt at all because the central bank is owned by the government. And thirdly, you talk about fiscal space, but I think you then moved in your 6th point maybe to say actually it's not fiscal space that's important, it's productive capacity. The real, and then you ended up saying that at the end of the day it has to be measured in money. So you return to an idea that money has independent standing as an artifact, where actually, it only is invested with value because of the production of goods and services.
We have here a leading expert in functional finance, someone who knows far more about this than I do. I think I agree with your I agree with substantially agree with your points. The productive fiscal space, if I understand it correctly, which I might not, fiscal space is the difference between our resource capacity and how much we're using up. I don't think money has an independent existence, but nor do I think meters and kilometers have an independent existence. But then how we measure things. So we're going to be measuring our productive capacity in dollars or things like that. Yeah.
We have a question online, so I might go to that one next. If someone else has a question, this is from Hans. Doesn't the dichotomy of sharing and exchange imply the need for a second kind of money, the right to share, which becomes invalid after sharing, like a cinema ticket? Question mark. Which therefore cannot generate inflation nor be hoarded? Question mark. Do you understand that question, Karl?
I would probably need to read the theory behind this idea of money before I could really meaningfully comment on that. I don't know.
You'll take that one. Yeah. You'll take that question on notice.
Because I do think the kind of money we have is a lot like theater tickets already. So I'm not sure.
Yes. Emma and then Mark.
I'm genuinely unconvinced.
I might just do this for the people online.
Sorry, I'm genuinely unconvinced that a universal basic income properly implemented will be inflationary. I just find it difficult it's difficult to know how it will happen depending on how behavioral changes will affect, because I can think up quite a lot of deflationary pressures. And you can look even at some of the previous research about how people say they will change their behaviours if they had the confidence in a universal basic income sticking around and being regular payments. And with that, so I really don't know whether it's necessary that we really engage so hard in this debate that we have to conquer inflation if maybe it's just not going to happen.
Well, it's a question of it's not a question of how much. Giving people money certainly creates expansionary pressure, and how much you give them, and there's some amount of it that would create an insignificant amount of expansionary pressure. If we gave everybody in Australia $1 tomorrow, one single dollar, probably nobody would notice, and there would be very little expansionary pressure. But if we gave everybody tomorrow, if we gave every Australian $100,000, and we did not introduce any new taxes, we would create a great deal of inflationary pressure. And so the question is, between those points, when does pressure kick in, and how much taxes do you need to counteract?
Você está entrando na sala.
But say if a huge number of women
Aí ele rodando aqui.
go back. Sorry. Say if a huge number of women go and get an education instead, and then they put that money towards their education loans or whatever. That's deflationary. They might be receiving, in fact, a pay cut, but they'll have the confidence to do that. There's a lot of these behavioral changes that could genuinely cause deflation.
Well, I think if you get new money and then pay off your loans with it, then we create money and the money instantly disappears. That's expansionary pressure of creating that money. But so that deflationary pressure they create when they pay off that loan merely balances the inflationary pressure that we created when we gave them that cash. So those two even out. And yeah, there certainly will be some effects like that. A lot of people will pay loans off with it or something like that. But we can't, if we're going to give a really high and substantial income to people who are inadequately housed and inadequately fed, we're going to think they're going to buy housing and food and increase the prices of those things.
Perhaps, sorry. Is that all right? Do you want a third go? You might get time for a third go, but I want to go to Michael first, if that's all right. Just because we've got to finish this one at 2.
So I just want to build on what you're talking about, Karl, and reference Scott's obvious about humans now being the only species that need money to survive. So if we can create money to finance government, create money to finance bank lending to the borrowers then spending money for their needs, also have the opportunity to create money for a UBI. So if you've got 3 ways, as a UBI for basic needs, as for government deficit spending and for bank lending, then surely it is the necessity to provide a UBI basics requirement for everybody to survive, because without money we can't survive. That should be the priority. And then government spending comes on top of that, and then bank lending. But we need the mechanisms, in fact, to govern those 3 ways of getting money into the economy. So I guess I'm supporting what you're saying, but that we ought to be focusing on the UBI as the primary way of getting money into the economy.
Right, rather than things like quantitative easing or buying aircraft carriers from wealthy corporations.
Give it to the people, because then they have a democratic vote in the economy better than their political vote in the elections.
Yeah, I agree with that entirely. We got to get money to the people. We also have to have sound financing policy to make sure that money we give them maintains its value. They can buy what they need with it.
Got one more question for Maggie. Thanks, Maggie.
Thank you. Just a quick statement, really, for those Australians who aren't aware that last year our RBA pumped in 281 billion into the economy doing a bond buyback QE. That's the equivalent of $12,000 for every man, woman, and child in Australia. So.
Thanks, Maggie, for putting that into perspective.
Yeah, I don't really have a response to that.
I have the sky before you.
Just a bit in for the Australians here.
All right, Karl.
Yeah, well, I guess to respond to that is to say, and it's his answer is really the response to that. It's so much better if you're going to put money in the economy to give it to human beings instead of wealthy corporations.
All right, thanks, Karl. Karl, I need to get you.
Oh, the mic. Yeah, I keep forgetting that.
Let's got to shut Karl up sometime. No, it's not good, Scott. Scott, you go. Sure. I do want to put my hand down. Okay, thanks, Scott. And we heard from Scott in our opening address, and we're keen to hear from Scott again. And this time, Scott's going to be talking about Let There Be Money, understanding MMT, and basic income. Thanks, Scott.
Thanks. Okay, so in this, I'll actually be, kind of covering some of the same space that Karl just did, but I'll try to simplify this down a bit and maybe go a bit slower.
Yeah, a lot of coffee, Karl. A lot of coffee.
I'll start by saying that as a result of the pandemic and our response to it, it changed the way that I thought about the strategy that I was utilizing to advocate for basic income. And that strategy was that from the beginning, from the very beginning, I've always understood money as being this non-thing, this tool that isn't real. But I wanted to speak within the language of the orthodoxy to make basic income more palatable, to kind of come off as more respectable, that I'm being very responsible in talking about, what do we need? What taxes do we need in order to pay for basic income? But as a result of the pandemic, it was just kind of really surprising and worrying to me to see how in this time in the US, when we saw this urgent need and we just spent trillions of dollars just at the drop of a hat when it was necessary. And when we did that, it's like we still couldn't escape this kind of idea that there was a limited amount of money in order to provide. And so therefore, we needed to means test to avoid providing it to the rich. It was really bothersome to me that they couldn't get people to think that, all right, let's just do a universal payment. And then if you want to claw it back from the rich, then do that next year when we know what everyone's taxes are. But so I think that there's this real tension between the winning of universality of basic income and this continued orthodox belief that everyone really holds that money is scarce, and so therefore we have to be really careful about how we use it. So then I spent it was like 7 or 8 months or something, like writing this very long article about this, trying to explain UBI from this MMT perspective. And afterwards, I decided to, because it was such a long article that it just seemed like it was too long for people to read, that I published it as a book too, as a very short book, and hopefully people can approach this that way more easily. So to get into this, I think if I were to try to explain the kind of the main difference between MMT and kind of orthodox theory of money, is it's really about this order of operations difference of money and taxes. So in order to picture this, imagine like a circular river, and then at the top is this like structure over the top of the river. And you see that water is coming out this side and it's going around the circle, and then it's going back into this other side. And so everyone can agree that there's this flow of water through, and then there's this structure hiding what's actually going on. And so it makes sense that you would look at that and think, well, okay, there must be some kind of like water wheel inside there, some kind of engine that's moving the water from one side to the other to create the current. But then MMT, I would say, lifts off that lid and shows that, well, no, what's happening is you're actually creating money here, and then you're subtracting it here. So there's like this gap. It's not this continuous circle, it's this gap. And it seems like it could be kind of inconsequential, especially put that roof back on and to look at this and have like one set of people be arguing that no, money's being created and it's being eliminated here. Another one saying, well, no, it's one whole thing that's going around, and it's both like the same thing. But I think it's important to actually understand that money is actually being created on the one end and destroyed on the other, for the reasons I'll get into too. So again, just to provide like a little bit of evidence too, that is the way that it works, that government is creating money when it spends, is even just imagine that you wanted to create your own kingdom, you wanted to create money, and you wanted to tax. And how do you do that? Well, if you're going to tax your money, then you actually have to issue it first, and then you tax it back from what you issue. You can't just tax people money that they don't have. So obviously the first part is the giving of the money, and then you pull it back. And there's actually, you can imagine that this is, like, money itself actually has kind of a violence built into this history. You can get into this, like David Graeber's, History of Debt too, because it's just really interesting to go into this from the colonialist kind of perspective. Like, imagine you're a king, royalty, and you want to colonize some other place. It'd be very inefficient to actually send money, or send food with all of your troops or whatever to this other place. So what you do, it's very efficient to just give money to your troops, some kind of paper, some kind of something. And then in the other place, you say, hey, guess what? You owe us these little pieces of paper. But you're in luck. You can actually earn these pieces of paper by provisioning food in exchange with the troops for their money. And so it becomes this really efficient way of getting people to do stuff. And I think it's important to even realize that there's that kind of element in it too, that there's that kind of violence inherent. Mosler, in the MMT theory, he would describe like the ability to make money as in he'll create like business cards and say, hey, so got these business cards, and let's say I want my kids to do chores, and so how do I get them to do this? Like, if I just give them the cards and say, here you go, do some chores, and they're like, well, but that has no value, what's the point? But then if he says, okay, well, if you want these cards, you need to do your chores, and here's the other thing, is that I require 10 business cards per week in order for you to maintain your privileges to like your video game system, watching TV, these kinds of things. So suddenly the kids are like, oh, okay, I'll do some chores with the business cards. And so that's kind of just how this money is created. But then in my book, I make the point that whereas MMT people will use that and even argue against something like UBI, I would say that Mosler was actually providing a UBI in some way, in that his kids' basic needs were met. Like, he wasn't saying, I will only give you these cards if you don't do what I want, then I'm going to withhold food from you, and you're going to need to sleep outside. His kids actually do these chores because they want the extras, not for their basic needs. And so I think that's key. So then part of this too is part of this economic talk, if you want to, like, what are deficits? Deficits are just the difference between how much a government spends and how much it taxes. So if there is a difference between those and they don't balance out, then they're running a deficit. And I would argue that it's not necessarily bad. And I think that a lot of governments actually know that that's not bad. They'll just use it politically to say it is. And also in my book, I make the analogy of this, I call it a magical bathtub, where imagine a bathtub where water is flowing into the bathtub, and that's government spending. Then the drain is a taxation. And you want to fill up the bathtub. Like, you want to have a bathtub at maximum capacity, which is where like the water would be at the top. And that's kind of the goal. So, but in this, the economy isn't quite like that, because as you actually spend money into the economy, and as it reaches like its capacity, then it actually has the ability to grow. So you actually want a little bit of deficit even in there in order to grow that economy. And when I say growing the economy too, it's also about this capacity to actually meet demand. And when you start looking at this too from this resource capacity point of view and not this I need dollars point of view, then I think it makes it easier to actually think of physical resources, technology, people, knowledge, and what it is that you're really are capable of doing, and not just like this straight up money requirement. And I would say too that basic income is key to actually achieving like this maximum capacity that we're actually capable of, because there's so much wasted capacity by not utilizing it. So one of these things, I argue, David Graeber's bullshit jobs, I think is a great example of this, where there's all these people doing time, spending their time and energy on these things that are unnecessary. And I would also argue that there's a lot of work out there that's entirely necessary because of the lack of basic income in regards to, let's say, there's people in hospitals, there's people providing medical care, there's people in prisons, there's people going through the judicial system, the criminal justice system. There's so much stuff that we're doing that is actually reducing our total capacity. And basic income actually makes us more able to reach that. And so thinking about this from that perspective too, you can look at, say, like a universal healthcare kind of setup, and you can see something like that as being freeing of capacity by moving or freeing up all these like millions of people who are just in like medical administration jobs that are only there because of the private insurance system. So that's one way. And another way that we could increase capacity as well, that's our desire, instead of coming up with money, is that automation makes more sense. Like, if we can automate something, let's do it. This is contrary to kind of traditional MMT thought with the job guarantee. And I think that's part of the conflict, is that if your focus is on jobs, then you're going to want to employ people just doing stuff. Instead of the focus being, let's actually accomplish this thing that we need, and let's use as few resources as possible in order to accomplish it. So I think that by focusing on jobs only, we reduce our capacity, and whereas with basic income freeing us and actually perhaps creating more of an incentive to automate, then we could increase capacity that way. And another thing is that the basic income actually enables this shift to intrinsic motivation, so that you have more people deciding what it is that they want to do and purposefully doing something because they want to do that. And I think that even the fact that when you make something, as Karl refers to as the voluntary participation economy, like, I would argue that's more productive. Like, if people are really choosing to do something because they want to, they're going to be more productive doing it than if they feel that they're forced to. And I think there's also a disinflationary impact to even pursuing unpaid work. I think that you could argue that unpaid work is a Bogovian subsidy for that saves money that other people would usually otherwise spend. So imagine that if suddenly a bunch of unpaid care workers went on strike and refused to do unpaid work, then suddenly there would be a huge demand for the same amount of paid workers. and the amount of the cost of that would go skyrocketing. And so effectively every unpaid worker is providing the subsidy, is making the cost cheaper for everyone else. And so in that way, that again would be disinflationary. And so I think that when you realize that the money isn't real, that we can create as much money as we want, it's not about saying that you can just do anything. It's just saying that the money is not the limiting principle. And so when you decide, like, let's say, when you decide that you want to provide some to some money to some, and then not some to others, then just provide it to everyone and then subtract. So taxes become a tool of subtraction. It's not about funding. It's about shaping the policy. It's about shaping incentives. It's about modifying the way we do things. And so when you look at, say, carbon tax, from this perspective, it's not that a carbon tax is funding a basic income. It's that you have a basic income and you want to utilize carbon taxation in order to reduce inflationary forces, but also be pro-environmental and provide an incentive for people to reduce their carbon footprints. And those people are usually at the top of the consumption curve. And I think that being able to subtract and thinking about taxes in that different way is I think going to be pivotal to actually to winning a fully universal basic income. Another way of thinking about this is let's say if you think that there's a limitation to money, then you can think of like let's say a hole that you want to fill. And if dirt is money, you can imagine like, all right, well, I'm going to try and find just the right amount of dirt to put in there, and then we'll like fill it up. And like I got to be really careful about like not putting too much in this hole. But using taxation and subtraction, a really easy way would just be dump a ton of dirt into it, more than enough, and then you just shovel away the excess, and you're just done. And I think that it's easier to understand universality that way when you're thinking about the rich in that kind of perspective. They're like, all right, you don't want to get more money to the rich. Okay, great. Then just tax more than you're providing them with basic income, and even tax more to reduce inequality even further. But I think that breaking that connection between taxation as this funding mechanism and taxation as a shaping mechanism is what I think will enable us to achieve an actual universal basic income instead of this means-tested insistence on not providing to everybody. And then with that said, there's a challenge to this too, where if governments really understand that money is not the limitation, that the resources are, they can pass wherever they want to, that they want to spend money on, then there's this danger of governments doing all kinds of things that are actually wasteful, damaging to people, to the environment, and those kinds of things. So I think with this perspective of MMT and UBI, that it becomes even more important to actually utilize some kind of evidence-based policymaking, where you're thinking of what actually works, what doesn't, what is good for the economy, what isn't, and not just like passing everything you want to, but being really careful to pass things in a way that has the incentives aligned, that leads to the outcomes they want.
We'd like to leave. Is that okay, Scott? If we leave it there, or do you want a final sentence?
Okay, yeah, I'll just end by saying that that thinking about it from this perspective, I'm not saying, again, taxation is not that it's unimportant. It's still important as a shaping tool, and that I think that any UBI provided from a country that creates its own currency should actually provide some amount of that UBI through deficit funding, and not have to worry entirely about being fully funded, because I think some amount of deficit financing is good, and that you just don't need to do one-for-one spending in order to achieve what you want.
Thanks very much. There were some copies of Scott's book outside, but I think they were sold now, right?
Yeah, so.
So anyway, in context, Scott, I'm sure to get other copies. Thanks also for the use of metaphor in sort of explaining your theory. That's always useful, particularly for those who are not familiar with MMT. And the way in which you talked about tax, for example, reminded me of George Lakoff's stuff when thinking about taxation. And dominant narrative in the US is as a form of theft, and he says you need to frame it thinking about ways in which people pay taxes is like belonging to a country club or a club that you pay your dues. Therefore, get cheaper use of jacuzzi in the golf course and those kinds of things. So, but he said that reframing process and thinking about taxation is a long process, but you have to work on a cultural level, not just the material. So that's a good point you made there, I think. Now, we've got one question in the room, probably, at least. I've also got one online. I might take the one online first because it's a long-ish question, if that's okay.
Oh.
I'm just going to read it out, Scott, so listen carefully. So the question is, do you know the work of heterodox economists like Dr. Steve Keeney, Professor Michael Hudson, who explain that money is created by private banks when they create debt, lending money, issuing mortgages, and other credit instruments? This is said to be one reason why the non-working rich get richer, as they rely on workers to consume and pay rent to keep the neoliberal, neo-feudal system going. A UBI might therefore threaten the very heart of this current global financial rent-seeking system. If so, how can UBI proponents address this? Did you follow that?
Yeah, especially at the beginning. I may not answer the phone with the end part, but let me get to the beginning first, because it raises a good point that I didn't include. That is entirely true. It's not that all money creation in total comes from the government, but because we do allow banks within the system to actually create money too. Every time that there's a loan that's newly created money, that people pay that back. So there's this ability within the overall system to expand the supply even further. And understanding that is actually important too, because then you can play around with policies that can have disinflationary pressures by limiting the ability of banks to actually create that money. So, you could do things like require 100% reserves, as in banks wouldn't be able to really expand the supply anymore. Or you could say, let's have banks provide like lower interest loans to green initiatives, and they would have to charge a lot higher interest rate to go to initiatives that are fossil fuel heavy, things that we don't want, like that. And so you could actually alter this, and that's a way of creating disinflationary pressure without taxes, without pulling money out, by just reducing the abilities of banks to further expand it. So it's an important issue to raise. And then I don't know if I can get the second part with the rental part of this question, but I think I guess I would say that the UBI floor is this important element to actually enable people to even create their own businesses, to compete against other businesses, to refuse businesses that are actually very harmful. So, like as an example, payday loan lenders. As long as basic income doesn't exist, they're much more able to extract 1,000% kind of interest rate loans. Whereas with basic income, and this is from the experiments too, the money lenders are the ones complaining. Everyone else is like, I love this. And the money lenders are like, no one's accepting 1,000% loans anymore. So there really is this great power increase for people that can actually, I think, reduce the amount of rent that can be extracted from people by people.
Good points. Thanks, Scott, and a comprehensive answer. We do have one at least in the room, which I didn't see whose hand it was. Who's got the question? Well, there isn't one. I've got another one online. Let's say, Kate.
A couple of years ago, I would present it, framing it in the same way you had done, in terms
Just
of,
use the
in
mic.
terms of deficit expenditure.
I don't think it's turned on, Josh.
Pardon?
It is turned up.
In terms of deficit expenditure. But I have
Sorry, Jeff. We will get there.
but I have shifted actually at the instigation of Malcolm Tonery, who suggested to me this comes across in a rather negative way to talk about deficit, and that I should talk about money creation instead. Because the problem with the deficit definition is what it does do is over the years it ramps up this incredible debt. So you end up with these debts of 100% of GDP that are not repayable, that are extracting rent of interest payments, and that are restraining the economy. And if we hadn't called it debt in the first place, we would have had exactly the same macroeconomic outcomes without incurring debt. So, I suggested we just shift from calling it deficit funding to call it money creative funding, which is not debt.
Yeah, I think part of the challenge here is, again, the use of words that maybe we don't entirely agree on, and the kind of assumptions that we make by using them. So, when it comes to, I didn't mention this point, when it comes to deficit spending, it is a choice by governments to actually issue debt in response to that deficit. So if they don't issue any debt in response to that deficit, then obviously that's sovereign, debt-free, money. And if they do issue deficits, if they do issue treasury securities in response to that, which is what people refer to as debt, then that's something that increases the national debt. And I agree that that's challenging too, because people think of the national debt as being this big scary thing, and it's more like a giant savings account for people who have decided to put their money into something that they feel is a safe vehicle, which is very similar to a savings account. And but it's funny that we don't think of, like, if you go to the bank and deposit money, the bank now owes you money. But you wouldn't look at all these banks who owe all these people money and go, like, look at how bad that bank owes so many people money. Like, that's very dangerous. It's like, well, no, that's not really dangerous at all. It's just a savings account.
Scott, I'm just going to get one more quick question in online, and then we'll have to move on to Troy and Joe. So the question is just, do you know what Stephanie Kelton's, who is a prominent MIT economist, what her stance on UBI is? And has she responded to your great paper?
I don't know what her response is most recently, because this is actually part of the reason I even took the time to read her book and read more MMT stuff as a result of the pandemic. Was I was very impressed when the pandemic hit, and here, like, if someone was going to ask me to bet on what Stephanie Kelton how she'd respond to the crisis, is that I really expected her to be like, no, now's the time for a job guarantee. And instead, she was right out there with me saying, we need monthly stimulus checks. Like, we need to get those out there immediately. And so that changed the way that I thought about her and her views on just unconditional cash. And so in that regard, I know that she was totally over that. She was pushing for monthly stimulus checks. I would guess that she's probably, like, in the space of believing that that maybe some amount of let's say not basic income, probably she's thinking more of like a guaranteed income kind of thing. It'd be something that she'd be open to. And I whereas others in the MMT space very frustratingly are like anti-UBI and would say, no, it's horrible, you got to do job guarantee, that kind of thing. I wouldn't say that. I would guess that Stephanie isn't like that same thing, but maybe she feels that she can't be like, actually it's not that bad of an idea. I don't know.
Thanks, Scott. That's a good response. Okay, join me in thanking Scott again, and we'll move to
So we've got the Maroons and Blues team now below. It's coming in last, but not least. By the way, the vote actually New South Wales really shows how it
Good afternoon.
No, I live in
Marston
Queensland
and I'm in charge of the cash back.
Can we have this guy as well?
Who?
Someone who popped up on the screen.
No. Okay, so who's going to mic up? Troy.
Oh, can I just speak into that?
Can I?
Yes. No.
I'll chuck it on after.
You can use the mic if you want, Joe.
Yeah, okay.
You just hold it.
you're happy to read out your long title.
Sure. G'day, everybody. Thanks a lot for staying with us. My name's Troy. I'm from the Australian Basic Income Lab and Sydney Uni. And this dashing young whippersnapper over here is also from the University of Sydney, from the Department of Political Economy. And our paper today is less a fully costed model for sunshine dividends, which I think you all agree is a very catchy title, or catchy concept, and more of thinking through both the economic and the political pathways towards basic income in Australia, and looking at some different options. Because as we just heard in the last couple of presentations, maybe there's a strong argument that using functional finance or MMT financing or just regular, unconventional quantitative easing is the quickest way to achieve a basic income. Certainly in the Australian case, the closest we come to a basic income was JobSeeker plus the coronavirus supplement, which without the conditionality, which again we can have tomorrow, right? At the rate that people like Kristen and Jay have talked about, at the Henderson poverty line, and that might cost 1 to 2% of GDP. We can have it in place in a couple of months. Maybe that's the best option. But it would also create secondary challenges, right? One is, even if it was implemented in some sort of progressive shock doctrine, that wouldn't bring the Australian polity, the Australian people along with such a radical change based on ideas that are unfamiliar for many people. And then there's the ongoing issue with all sorts of heterodox economics, the macroeconomic policy management associated with heterodox economic theory, that you are reliant on a type of continuous technocratic management to ensure that your interventions, even from a functional finance perspective, to control inflation, not worry about how much money you can or can't create, that they are perfectly timed with the ups and downs of the economic cycle. And we've even seen very recent times in Australia that Reserve Bank governor can say interest rates are not going to increase until 2024 and then do completely the opposite. So there's a problem with ongoing technocratic policy management in relation to those options. But I'm not saying it's still not the best option for implementing basic income, but we need to look at some a spectrum of options. On to the next slide. What we're interested in looking at today is probably the intersection of a couple of different debates. One is anyone who's from Australia or knows something about Australia is aware that we are ridiculously well endowed with natural resources. Okay, so the top 5 in all, whether it's coal or iron ore or gold or bauxite or lithium or LNG, a top 5 global producer exporter of that particular commodity. And there's a lot of talk in contemporary times about Australia will become a renewable energy superpower. Enormous endowments of wind and solar energy and, what is it called? Green hydrogen, all that kind of stuff that may form the basis of a new economy. But as we've seen repeatedly throughout Australian history, there's been an inability to link that resource endowment to an ongoing social benefit to a broad cross-section of the Australian population. Mining is the way, as Joe is an expert on rent theory and extractivism, and mining is the main way Australia's economy is integrated into global capitalism. Right? And there's a lot of pressure for the mining industry to operate in a particular way in that context. So we're trying to think about that stumbling block, the difficulty of implementing any type of mining tax in Australia, as we've seen in recent times, and the potential for something like social dividends to make that type of policy change more feasible. The final issue we're looking at is, in Australia, do we just need to focus at the federal level as the only possible organ of government that can implement a form of basic income? Because that is where most of the revenue raising capacity is currently concentrated. Right? State governments formally have the right to implement an additional income tax, but any state government that did that would be instantly unelectable. Thanks to Queensland, actually, they abolished inheritance tax. That's right. But could this combination of a resource endowment and a politics around social dividends and a focus at the state level offer a way forward in the Australian political economic context? Social dividends have a long tradition in the history of thinking about basic income. As many people would know, going right back to the late 18th century thinking on the topic through to the present day. And I think there are two main strands in that tradition. On the one hand, a focus on expanding direct social ownership of the economy and letting everyone benefit from that. Nobel Prize-winning economists like James Meade, writing in the 1930s, wrote extensively on that topic for 50 years. And the other strand that is probably more popular in recent times is social benefits through social dividends from a publicly owned fund, right, rather than the direct ownership of the economy more broadly. And there's this underlying principle of providing a collective benefit from economic uses of the commons through the form of a regular dividend payment. And I'll put up Karl and Mike's book on the Alaska Permanent Fund as an example of that type of scholarship on basic income. How long have I been going on?
8 minutes.
I'm going to wrap up. Okay, there's a whole lot of different examples of this type of policy intervention. I'm not going to go through them because Joe's going to not have time. And just if we look at the Australian context, and this is at the federal level before we make a pivot to the state level and focus on Queensland, you could look at a very modest dividend based on current levels of public ownership through non-taxation revenue, but that's a fairly paltry sum of $1,600 per person annually. Or if we look at simulating some international models, that's the UK model that I've cited here, you would need to build up Australia's sovereign wealth fund a lot in order to still fund an income that at the individual level is far off the poverty line. So there are some tensions there to do with the temporal challenges of building up a fund big enough to finance a basic income that we would consider something as approaching adequacy. On that note, I'm going to hand over to Joe, who's going to take us into the state political debate, which was a reference to Marston.
Thanks, Troy.
Thanks, Troy. Look, classic me, I wrote a different conference paper than the one I prepared while I was sitting there listening to the previous two panels. So it's a bit on the fly, but I think it's engaging with some of the things that have been raised, not just today, importantly with Kathy's wonderful paper this morning, but also with some of the other papers that we've seen over the last few days. So I'm going to make a joke. Oh, Mike, please. So, look, I'm going to make a joke. I'm going to extend an invitation, and then I'm going to end with a provocation, because I think Kathy's precisely right that a demand is a provocation, and demanding is a pedagogical process. And I mean pedagogical in a critical sense that we are mutually constituting new knowledge. It's not just you sort of listening and knowledge from imparting. Now, the joke is there was this valiant individual who went walking along next to a lake, and they fell into the lake, and they drowned only once they were convinced of the idea of gravity. And that's the joke. I'll return to that. The invitation is I want you to all join me in, and this is a very unfortunately named term, but it's a technical term for a concept that comes out of Lacanian psychoanalysis, which is kind of bedtime reading. And I want you to join me. I want us to collectively, symbolically castrate ourselves. Now, symbolic castration in the Lacanian sense means to collapse the gap between the perception of reality and that reality itself. And that's something I think some of the papers that I've heard over the process of the Congress, I think could do with a good castration. Now, and this is really the point that I want to develop in relation to the previous papers, not just on this panel, but indeed over the last couple of days. So, sorry, I'll just change slides. I'll end with that slide. Now, this work is coming out of work that I've previously done. I've just published an article on Australia's resource curse and resource blessing, and I've made the argument that we're wasting our time arguing in favour of either a resource blessing or a resource curse approach, and that we actually need to transcend extractivism. In order to do that, we need to acknowledge that the resource blessing is simply the resource curse reversed, and they're two sides of the same coin. Now, I'm developing a similar argument in relation to UBI. I'm going to say something a bit spicy here and say that, look, the UBI jobs guarantee debate is actually the same as the resource blessing, resource curse debate. They're two sides of the same coin because they're attached to productivism. Now, productivism, in my definition, is quite simple, and that is the capturing and appropriation of the product of sensuous human activity, so not work, sensuous human activity for the purpose of profit, not for the purpose of just taking that profit and going and buy, a nice sports car, but for the purpose of reinvesting that profit in order purely to expand production. Okay, so that's how I'm defining productivism. And I'm trying to develop the argument that this is what the UBI jobs guarantee tension really is. It's all geared towards the same thing. And I'm going to make the claim that, like Kathy, I think we should see the UBI as the vehicle, indeed the preferred vehicle from my perspective, in order to transcend productivism. So how exactly do we go about doing it? Now, I think that it's quite concerning to me that some of the literature, or a lot of the scholarship on transition, on just transition in particular, is really, in my view, talking about just a transition. So it's a transition of certain things in isolation, but they're keeping the rest of the structure intact. So I think that they're destined to fail from the outset because they're set up on pretty shaky foundations. If we talk about an energy transition, for example, we're talking about what? Stopping fossil fuels. And that's where I'm going to get to, that's our funding proposal, actually, the fossil fuel stuff. But you can't talk about an energy transition without also talking about a fundamental reconstruction and reorientation of the way in which we produce and consume food. Why is that? Because as lots of farmers are finding out at the moment, chemical inputs are one of the most expensive parts of the production process of food, and that means that we arrange our food production systems in a certain way. Chemical inputs depend on what? Nitrogenous fertilizers require gas, right? So LNG, and this is the punchline that I'll get to a bit later. So when we talk about just transitions, we also need to take into account, if we're proposing any kind of transition, we need to understand how these transitions are integrated in these concurrent systems. So energy is related to housing, is related to food, health, education, and so on. The UBI, I think, is the centre of the wheel, and we can think about the transitions as spokes. Now, the UBI, in my view, is an adjustment mechanism. It's a way to smooth an adjustment mechanism between now and some kind of future imagined utopia after we've had these transitions. Now, I'll dig into that a little further, but I just want to go to... Okay, so I'm not going to bore you with lots of technical detail on these funding proposals. If you want some of that detail, please just go and read my paper that I published recently in the Journal of Australian Political Economy that looks at the resource curse and blessing stuff, and I've kind of left it open for this exploration of UBI. But the basic premise is, as Troy said, in Australia at least, the debate has typically relied upon trying to agitate for the Commonwealth to think about ways that we could fund the basic income. And sure, that's great, we need to keep plugging away at that. But there are other alternatives, there are other levers that we can push. If we look at the Queensland budget papers, for example, we're looking at about $1.9 billion in total concessions to the mining industry, just in terms of fossil fuels. Okay, and I'm quite sympathetic to the Greens leader Adam Bant's approach that we can't put the fire out while pouring more gas on it. It's just stating the bloody obvious. So I think it's quite clear, if we're going to meet any kind of climate targets, that we need to seriously consider at least decreasing our reliance on fossil fuel production. Now, of course, and this is part of the symbolic castration. On the one hand, we have governments, not just our own, promising that we're going to meet these targets. Big claims about some kind of future where we'll decarbonise economies. On the other hand, what are we doing? So the Biden administration, in the last 12 months, has just recruited more fossil fuel production than it has in the previous 5 years, because presumably it might be gearing up for some kind of conflict. And therefore, it's completely blown any kind of modelling that it's going to meet the Paris targets. Similarly, in Australia, one gas mine alone that's recently been approved is going to completely destroy any hope of meeting our commitments in terms of decarbonisation. So the reality and the perceived reality simply don't match up. Now, the proposal here is to consider what is going on at the state level, where we could perhaps divert some of this, some of these concessions.
Can you go closer to that, Mike?
Oh, yeah,
Thanks.
divert some of those concessions to achieve two goals at the one time. On the one hand, we can use taxation, as people like Ross Garno, for example, has proposed in the recent Jobs and Skills Summit. We can use taxation as a vehicle to try and expedite the decarbonisation process, particularly in relation to fossil fuel industries in Australia. And we can divert those funds to some of the utopian claims that we've been demanding in this conference. And to put some figures on that, Troy and I did a couple of back-of-the-envelope calculations earlier this morning. It'll take about $160 billion to give everybody in Queensland a basic income for a year that met the poverty line. So it costs JobKeeper cheaper, basically, to give every Queenslander basic income. Obviously, it costs a lot more if we're talking for the Australian, for the whole of Australia. But look at some of the numbers that are coming out of the Queensland budget papers for this year. There's $1.9 billion in total when we think about the concessions purely to fossil fuels. And let's take a bit of a trip down memory lane. And we talk. I mean, this idea of a lucky country I find quite funny and also a bit sad. Let's look at Australia's track record with managing our resources. So, in 1974, Tom Fitzgerald, who used to be the economics editor of the Sydney Morning Herald, was commissioned to do a study of the contribution of the minerals industry to Australian welfare. The finding, after the biggest mining boom in our history at that stage, the Australian states and the Commonwealth had actually given the mining industry $55 million. So after all the royalties came in and all the subsidies were taken away, the mining industry had contributed minus $55 million in terms of Australian welfare. In 2010, the Greens commissioned the economist Naomi Edwards to write a report looking at the profits in the mining industry. It turns out that 83 cents of every dollar found its way out of Australia, right? So these profits just evaporated, gone. So we have a very bad reputation when it comes to managing these resources. So I'm not very hopeful, is my point, that we can actually pull any of this stuff off, even if we propose it, because it's a good idea that, now I'll get to my final slide and I'll wrap up. Okay, everybody touch, I don't know, something physical next to you. Touch the floor, you've already got your feet on the floor, whatever. You're in the Andrew Leveris building. We've been talking about basic income, utopian demands in the Andrew Leveris building. Andrew Leveris, former CEO of Dow Chemicals, the biggest petrochemicals company in the world, was part of the commission, the COVID commission, put together by the Marston government at the time, headed up by a guy called Neville Power. Neville Power was head of Fortescue. These two guys put together, lo and behold, a plan. So Dow Chemicals, they take gas and they create petrochemical fertilizers, right? Dow Chemicals, Fortescue Metals put together a plan for a gas-led recovery out of COVID. What a surprise. My point here is that, and my personal favourite, in 2010, not 10 days after Prime Minister Rudd had been ousted from Parliament, a democratically elected PM, and I was no fan of Rudd, but there you go. Tom Albanese, no relation to Anthony, Tom Albanese got up at Lord's Cricket Ground in London and gave a speech to a bunch of mining executives, £10,000 a plate to go to this dinner, by the way. And this is what he said. Let this be a lesson to policymakers around the world who want to plug revenue gaps and play local politics. Now, let's come back to this provocation. This is what symbolic castration looks like. This is the reality we're faced with. I love talking about these utopian ideas, but we have to come to terms with the fact that we have to think big and think in terms of a utopia, but this is the reality in which we exist, and this is what we're contending with.
Thanks very much, Joe. And Troy, it just goes intellectual grounds. You can travel in a basic income conference, so you can go from MMT to Lacanian symbolic castration in one session. It's very end, as well as some political economy thrown in there as well. So we've got about 7 or 8 minutes for questions. Have we got some on the floor before I go to the theory quiz on mine? No, I'll give this to Josh, and you both like to share this thing. You're going to have to lean in, mate, to the mic here. Answer this question, Troy.
I'm not really sure about Queensland that much, not WA.
Can you speak up, Mark? Big voice.
Yeah, I'm from WA, and so some of this stuff really resonates to what you're saying. And looking at the Queensland economies versus the WA economy, this is more of a common question. Yeah, but I'd be interested to see you put this sort of analysis in WA, because I think the numbers you're talking about in terms of Queensland are going to be massively increased from a WA perspective.
Yeah, and look, I didn't want to be too much of a downer, but all we have to think about is COAG, the Commonwealth Grants Commission. I mean, you talk about how these things are redistributed. You see it every year. It's just not going to happen. They're not going to let us do it.
All right, well, I might just say, well, maybe they could let us do it. There'll be a bit of internal tension within the paper, which we would call a work in progress. Just that potential, and as you say, WA is the mining economy in Australia, Queensland being number 2, but that potential to link a regular payment might only be a couple of grand moves you towards a type of basic income through abolishing some of the subsidies to fossil fuel and using more resource taxes could be a way of mobilising local population in WA or Queensland around that move.
Just another quick point. Like just being in Brisbane, I'm looking at what this town is, just coming from Perth. Perth's a ghost town. Perth's dying. You come here and this is a place that's booming. And yet, in terms of the economy, Perth, like WA, is hugely more being powered by the mining industry. It's like we've got a massive government surplus. When we talk about COAG, we've got a more than fair share of the GST dividend intake. So I'm just curious when you're saying these things and seeing how much this economy seems to be booming from the street perspective, going to Perth where you know that there's so much money and it looks like the place is dead. It's just,
And just, I wasn't trying to be too pessimistic there, but one actual strategy that we could try is, Twiggy Forest opening up a huge hydrogen plant in Gladstone and has called for the abolition of the tax fuel credit scheme. Basically a diesel rebate that is made available to big mines and other industries. And that on its own would get us $1 billion more to chuck into the kidney. Right? But Forest is pushing that obviously because he's about to become the provider of hydrogen. So we could exploit these kind of strategic alliances, I think.
Yes, please, in the front. We'll just get a microphone. Hold on a second. Thanks.
Thank you so much. We are developing an app both from the wellbeing, planning, psychology backgrounds and with financial literacy for children and parents. We're very keen to explore and embrace the concepts of basic income. So different from an economic question, could you please give us some feedback as to if we were to incorporate the languaging around this, not only ideology, but economy, how might we best do that to the best of our capacity to influence and educate parents without it in any way being a political or a biased forum? We're starting at the ground level here.
Do we answer that at afternoon tea?
Yes.
Do you want to start in the 30-second response? And then, do you mind? I'll get that.
I'm sorry.
Right back to Josh.
I think probably those conversations have to start at a pretty fundamental level. You know, what in the world is basic income? Go through the different models. Social dividends is just one option, and have that sort of basic education, which doesn't look like you're pushing a particular barrow.
I would begin at an even more basic level, and that is that I think it would be great to empower people to question these kind of inherited wisdoms, because part of the point of this utopian project is that the prevailing wisdom is actually generated in order to stop these things from happening. So you could get kids to start thinking, well, I'm not going to believe what that economist told me. I'm going to go and have a think about this myself.
Benefit for all.
Yeah, so we've got one question from Liam, and Liam, just by the way, he wasn't here this morning, is the person to give credit to for the video.
Troy, you talked about the sovereign wealth fund. Can you either run the counterfactual for me of, if we were trying to set this up some time ago, when should we set it up to be at a point now that we could be providing a UBI at the property level, or run from this point on, how long will it take to actually set that sovereign wealth fund up from this point going on?
Short answer is no, but because it depends on, if you're looking at a fund that's based on the reinvested returns on the invested capital of that portfolio, it depends on the rate of return over a period of time. Like obviously, in Australia, it set up in the 1970s, when Alaska did, or whenever Norway established its sovereign wealth fund, it would quite possibly be the biggest sovereign wealth fund in the world, and could easily generate a dividend that would cover a few $1,000s a year.
Sorry, just on that one, we could do it now because we've got, so between Brisbane and south of Melbourne, down where Elise is from, Frankston, we've got at least 11 chemical minerals within the mineral sands that will be very, very lucrative going forward. So there's an idea.
Around the events.
Yeah, and already just in the last decade, Australia's gone from not much of a lithium industry to, I don't know, number 1 or 2 lithium exporter in the world.
And we're not the Norwegians, and we've never quite had that forethought. We squander those opportunities pretty much in Australia as part of the answer, right? Now, that does bring us to 3 o'clock. And I just needed, well, first to thank Troy and Joe for their great paper and our other presenters in this session with Scott and Karl. But we were, as I said, going to have Eduardo Simplici's paper in this session, but that didn't happen. But Eduardo's presentation is going to happen in the break. If you want to grab a coffee in room 230, fingers crossed that the Zoom link works. We've had difficulty with Eduardo getting the right time and getting the right technology. But if you do want to see Eduardo's presentation on implementing citizens' basic income, then that's going to be in room 230, which is just on the way out the door where you can grab a coffee. It's a short afternoon tea break, 3 to 3:15, and then we have sessions before coming back into this room at 4:45. So thanks everyone again, and thanks for being alert, but not alarmed, in the late afternoon of day 3. Thanks. Good on you, boys. Well done.